When you look at NVIDIA, it's good to see you, Vivek. When you look at it, I think there's two angles. One is how strong are its customers? How strong is demand going to be? And then you've got, I guess, competitors to NVIDIA that want to get into the same business. And on both of those metrics, I think you think NVIDIA is well positioned. They're still the leader, and demand is still going to be strong.
Yeah, good morning, Joe. I think the key is that their customers are in a race to re-architect the data center and replace traditional servers with accelerated servers. This movement had started about a year or two ago, and then as soon as we started to see the improvements in generative AI and these large language models, which, by the way, the computing requirements to train some of these models are growing 4 to 5 times a year. So this is not your, Moore's law progressing every 2 years. This is technology that is changing every, 4 to 5 times a year. So we need to throw a ton of computing infrastructure, and it is not just the processors, it is networking, it is optics, it is software, it is developers, it is bringing it all together. And in our mind, there is only one company that can bring it all together. This is expensive, no doubt. We are going from capital intensity for a lot of these cloud players that used to be 9 or 10%, and now it's 15 or 16%, right? CapEx is growing 50+% a year. But we do think that this is very important for them. It can open up new revenue opportunities, and this build-out and re-architecting can last at least through the next decade with a 4 or 5 year of initial build-out and then a lot more success-based build-out. And then finally, yes, there is competition. But we do expect NVIDIA to maintain its 80 to 85% market share, and then another 10% or so for these custom chips, and then a few percent for other players such as AMD.
In an interview, Ram Ahluwalia, CEO of Lumida Wealth Management, stated that NVIDIA is the clear winner in AI and will be the first business to be valued at $4 trillion. As more businesses continue to invest in GPU computation, he adds, he anticipates that the stock will hit $150 by the end of 2024. Melius Research's head of technology research, Ben Reitzes, previously discussed his position on the stock in an interview on CNBC on October 15. Similar to Ahluwalia, Reitzes is optimistic about NVIDIA Corporation and believes that the stock will trade at a P/E to growth ratio of 1 in 2025, which is quite appealing for a well-known company like NVIDIA. NVIDIA's place in the technology and artificial intelligence space is undeniable. The business and Deloitte announced their collaboration on October 21 to implement digital AI agents for the healthcare industry. The same day, NVIDIA Corporation partnered with Microsoft to provide initial support to AI startups worldwide, with an emphasis on healthcare and life sciences. In later stages, the two businesses will expand to additional industries. Microsoft will give Azure credits to access top AI models, while NVIDIA will give inference credits to run GPU-optimized AI models. All things considered, NVIDIA Corporation supplies AI hardware and software to medium-sized businesses, high-growth sectors, and mega-cap corporations that have been investing billions of dollars in improving their AI infrastructure. The business anticipates $32.5 billion in sales in the fiscal third quarter of 2024, primarily from its new and upgraded Blackwell chips and its fast-expanding Hopper architecture. In its investor letter for Q2 2024, Ithaca Group's Ithaca U.S. Growth Strategy said the following about NVIDIA Corporation. By producing high-performance graphics processing units, GPUs, NVIDIA Corporation leads the visual computing market. The business focuses on 4 major and expanding markets: professional visualization, gaming, data centers, and automotive. Data center acceleration, artificial intelligence, AI, machine learning, and autonomous driving are some of the most intriguing computing fields that NVIDIA's technologies have the potential to dominate and disrupt. 2 factors contributed to the stock's increase during the quarter. First, the stock profited from the intense anticipation surrounding the advancement of generative AI and the possibility that this would require the acquisition of numerous NVIDIA products for a very long time to come. Second, NVIDIA demonstrated its dominance in the development of today's accelerated computing infrastructure by posting another impressive beat on and raise quarter, raising its F2 Key 25 revenue projection over street estimates. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
That's demand for NVIDIA's Blackwell chips.
Yeah, I think we have a few things that are coming together. First of all, the customers themselves are being pushed by this private company, OpenAI, on one side, that is innovating rapidly in a very kind of closed and proprietary architecture. And on the other hand, you have a company such as Meta that is putting out large language models in a very open format, right? Anyone can go and access their models. So the traditional cloud players are having to take the lead from these two very important forces. And this is not just a US phenomena, right? We are seeing this spread across the world, where every country, every region wants to be involved in setting up their large language model. NVIDIA is in India this week, for example, and there's a lot of large language models that are being trained in Indian languages, right, for that culture. There are large language models that are being trained for all the languages and culture of the Middle East. So I think this is a global phenomena. Enterprises are jumping on board. Novo Nordisk is deploying a supercomputer, using NVIDIA's help. So it's a global phenomena. But as I mentioned, that in order to be successful in this, you can't just be successful in semiconductors, right? You have to be successful in the underlying systems integration technology, in networking and optics and software and developers. And the other important part of what you mentioned is you need scale. You need to be able to work very well with the supply chain because this is not going to take just one player. It's going to take many different players coming together and putting out this technology with a lot of reliability. That's the only way, I think, to scale it across this broad base of cloud and enterprise and sovereign entities.
With its strong financial results and strategic posture in the quickly changing tech sector, NVIDIA Corporation, a global leader in graphics processing unit, GPU, and artificial intelligence, AI, chips, continues to draw in investors. The business is navigating through a time of unparalleled innovation and growth, which presents both enormous opportunity and possible challenges. The financial trajectory of NVIDIA has been nothing short of remarkable. Analysts predict significant sales growth from $60.9 billion in fiscal year 2024 to over $200 billion by fiscal year 2027, reflecting the company's persistent outperformance of market forecasts. The increasing need for AI processors and enhanced computing solutions is the main driver of this astounding growth. Estimates for earnings per share, EPS, range from $1.15 in FY 2024 to as high as $4.85 by FY 2027, suggesting a similar rising trend. Many analysts have maintained strong outlooks on NVIDIA's stock, with price targets ranging from $135 to $180. As a result of this anticipated expansion, NVIDIA still faces some short-term difficulties in spite of these encouraging forecasts. The company has stated that the switch to their next-generation Blackwell GPU architecture may put pressure on its gross margin. As the corporation increases production of these new chips, some experts predict a brief decline in margins. Nevertheless, this is typically seen as a temporary problem that should be resolved as yields increase. NVIDIA's success can be attributed to its unwavering focus on innovation. The Hopper architecture, the company's current flagship AI processor, is in high demand from both companies and cloud service providers. The future Blackwell GPU, which is anticipated to provide substantial revenue growth in the upcoming years, is the subject of a lot of curiosity. According to recent sources, performance problems and chip respins have caused a slight delay in the Blackwell architecture. Although some investors are concerned about this, many experts see it as a small setback when considering NVIDIA's product pipeline as a whole. It is anticipated that the business would start distributing Blackwell samples to customers soon, with volume production increasing in the fourth quarter of fiscal year 2025. NVIDIA's success has been attributed to its ability to promptly resolve technical issues and offer substitute solutions. The business's QVDA programming platform, which provides developers with a strong environment for AI and high-performance computing applications, is a major competitive edge. With an estimated market share of over 95% in data center AI training and inference chips, NVIDIA's dominance in the AI chip industry is evident. The company has been able to take advantage of the rapid expansion in AI investments across a number of industries thanks to its dominant position. The AI server total addressable market, TAM, is expected to develop at a compound annual growth rate, CAGR, of more than 60% between 2023 and 2027. With its solid ties to hyperscalers and growing presence in enterprise markets, NVIDIA is well-positioned to take a sizable chunk of this expansion. On the other hand, the semiconductor industry is becoming more competitive. Cloud behemoths like Amazon and Google are investigating unique chip designs, while competitors like Advanced Micro Devices and Intel are investing heavily in AI chip development. To counter these competition risks, NVIDIA will need to be able to sustain its ecosystem advantages and technological edge. NVIDIA's recent growth has been mostly driven by the data center industry, where revenues have increased by triple digits year over year. The quick uptake of AI and machine learning technology in a variety of industries is primarily responsible for this increase. Large cloud service providers and other hyperscale clients are still making significant investments in AI technology. These clients' capital expenditures, which have increased significantly in recent quarters, are thought to be a major indicator of demand for NVIDIA's systems. According to some analysts, peak capital expenditures would not happen until late 2025, indicating a protracted era of high demand for NVIDIA's goods. Another opportunity for expansion is the increasing enterprise usage of AI technologies. It is anticipated that NVIDIA's initiatives to increase its footprint in edge computing and on-premises AI products will support its long-term revenue diversification. Even though AI and data center applications are now the major focus, NVIDIA's gaming division still accounts for a sizable portion of its total income. With a market share of more than 75% in PC graphics cards, the business continues to hold a leading position in the gaming GPU market. Due to frequent product refresh cycles and the rising graphics requirements of contemporary games, analysts predict that demand from sports fans and casual gamers will remain robust. Another possible growth path for NVIDIA as it increases its footprint in the gaming industry is the GeForce Now cloud gaming service. Other markets, such as the automobile and professional visualization sectors, are also exhibiting promise. With the increasing use of advanced driver assistance systems, ADAS, and autonomous driving technology, the automobile industry in particular is viewed as a long-term growth prospect. So what does this really mean for NVIDIA's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
A comprehensive look at the chip sector and the rising tensions between the US and China in your book, Chip War. So how would you characterize the state of the industry right now?
Well, I think the industry is simultaneously booming because of all of the investment in AI, with data centers being built, requiring more and more expensive semiconductors than ever before, but simultaneously being stressed by the US-China political competition, which is restricting market access and adding new limits on who can sell which types of chips. And of course, China is one of the world's largest economies. And so it matters tremendously if US companies are unable to sell certain products to them.
And we saw that pandemic era shortages were really a wake-up call for executives and policymakers and investors as well about the importance of expanding or at least trying to bring back some chip manufacturing capabilities to American soil. And part of that effort resulted in the 2022 Chips and Science Act, which earmarked $39 billion in subsidies and gave investment tax credits to strengthen domestic chip production. So how would you say that program is doing, and what sort of impact have we seen on the industry?
Well, I think it's undeniable when you look at the data that there's been a huge boom in investment in chip making facilities in the US, something like a 10 times increase over the last couple of years in investment relative to the prior trend. So that is evidence of success. That's exactly what Congress wanted when they passed the CHIPS Act. But I think it's also important to keep the scale in context, because capital investment in this industry is so huge that even a major multi-billion-dollar program like the CHIPS Act only moves things slowly. And so just to put some numbers on the table, the CHIPS Act, as you said, allocated $39 billion in capital expenditure over the next couple of years to subsidize chip manufacturing. But the largest chip company in the world, Taiwan's TSMC, spent almost that much money last year in capital investment in just a single year. And so that illustrates just how large the amounts are that you have to spend if you want to change where manufacturing is happening in this industry.
As it strengthens alliances to take advantage of a developing market, NVIDIA announced on Thursday that it will provide artificial intelligence processors to Indian businesses, including Mukesh Ambani's Reliance Industries. Chief Executive Jensen Huang NVIDIA announced at an AI event in Mumbai, the business capital, that the U.S. company will provide its Blackwell AI processors for a 1 gigawatt data center Reliance is constructing in the western state of Gujarat. In an expansion spearheaded by companies like data center supplier Yata Data Services and Tata Communications, NVIDIA also stated that it intends to offer tens of thousands of its Hopper AI chips to construct massive data centers. Huang stated that, in contrast to his prominence in software exports, India will be the nation that exports AI in the future. AI, data, and AI infrastructure are the basic components, and you have a sizable user base. In order to increase consumer appeal and support initiatives like content translation and customer service AI assistance, Indian firms, both big and small, have concentrated on developing AI models based on the country's variety of languages. With a population of over 1.4 billion and inexpensive internet, the South Asian country is also a major expansion market for American digital companies. According to NVIDIA, Tech Mahindra, an Indian IT services company, is the first to apply its new Hindi language AI model to create a unique AI model called Indus 2.0. This model is centered on the language, which is spoken all over the country, and its several dialects. In addition to Tech Mahindra, NVIDIA is training over 500,000 engineers to create and implement AI agents using its software by collaborating with IT behemoths like Infosys, TCS, and Wipro. Among the businesses scheduled to evaluate production layouts in a virtual environment using NVIDIA's Omniverse simulation technology were Reliance and Ola Electric. At the NVIDIA event, which managers claimed was delayed due to a sizable crowd that gathered to see the $3 trillion chip company's boss wearing a leather jacket, Huang emphasized India's AI prospects. According to Huang, India is already at the forefront of semiconductor design and artificial intelligence development. India will become an exporter of AI rather than a back office and an outsourcer. The Hindi language AI model, which was unveiled on Thursday, expands on Huang's belief that in order to guarantee inclusivity, each nation must develop AI utilizing its own labor, data, and infrastructure. In addition to headquarters in strategic places like Bengaluru, a tech hub, and Hyderabad, which is close by, NVIDIA has built engineering and design facilities in India since its establishment over 2 decades ago. Reliance NVIDIA made a commitment in September of last year to create AI supercomputers and huge language models that are trained on Indian languages. NVIDIA and the Tata Group announced a similar collaboration later that year. However, there have been challenges associated with India's AI aspirations, including the government's $1.25 billion investment to support projects, firms, and the creation of LLMs. Because setting up fabs or fabrication facilities entails a significant financial investment and requires specialized personnel, its chip-making sector is still in its infancy. The first chip has not yet been produced in India. Analysts see a long road ahead, even though international chip companies are investing and establishing facilities in India as it competes with key hubs like Taiwan to grow its semiconductor sector. India currently contributes very little to NVIDIA's income, Huang stated, but our hopes are large.